I'm going to stop my screen share for a moment. And Kathy, come on up and join me.
Well, hi, everybody. Glad to be here today. And I guess I'll go ahead and share my screen real quick. It looks like they can see, so this is great. All right. Well, again, I'm glad y'all are here today. And trying to remember if Alicia mentioned the fact that, this is just a small portion of a complete course that I've developed, because there was actually a hole in a lot of people's knowledge when it came to using not only QuickBooks, but other software programs where you still, I feel like, have to have some basic knowledge of what's going on behind the scenes to understand properly how to use these programs. And that's why I developed this course. So hopefully after today, you'll have an appreciation not only for what's going on behind the scenes, but what used to be done back in the day when everything was done by ledger paper. And just before we even get to that point, I don't know if you can see this 13 column year pad. I like to show this pad, and I'll probably show it again when we actually talk about the accounting cycle, because this is what people used to have to do at the end of the accounting cycle when preparing a manual your financials. And that was probably a yearly undertaking that most people dreaded, because you had to make sure everything lined up and all that. But we'll talk about that when we get to that point. So with that said, let's go ahead and jump over into the overview. And this is actually 4 lessons that we're doing. So here we go. So before we dive into the how-to materials, and we are going to talk about T accounts in the subsequent lessons, but this first lessons here is important that you be introduced to these fundamental concepts. And you've probably heard a lot of this stuff talked about, but this is basically what we call foundational material. If you understand this, then everything else should make more sense. So I promise once we get through lesson 1, it won't be so cut and dry, but this is stuff you need to know even before we get into the T account. So what we're going to talk about in lesson 1 is the accounting versus bookkeeping. We're going to talk about the accounting cycle. We're going to talk about business entities. We're going to talk about the separate entity controls and separate entity assumption and internal controls. I'll get that out eventually. And we're going to actually define what double entry bookkeeping is. We're going to talk about the chart of accounts. We're going to also discuss the accounting equation. And then I'm going to go over an overview about the financial statements and what their purposes are and all of that. So if you're ready, let's go ahead and go through. And if you have any specific questions on the material, then like Alicia said, go ahead and put those in the Q&A, and we'll have various points throughout the lesson that will stop and give you a chance to ask those questions, and we'll address those on here as much as we can. But a lot of times, if especially when we get in the hands-on stuff, I might have you throw some stuff in the chat just to make sure you're paying attention, and also to have a little fun there. So anyway, we're going to start with accounting versus bookkeeping. And one of the things that when we talk about accounting versus bookkeeping, a lot of people use these terms interchangeably, but there is a distinction. And I don't know if any of y'all got to catch the episode with Brad Salmanis and Andrew Wall, Friday Night Live with Accountants, the other night. And Andrew asked me what the difference was. And basically, when we're talking about the differences, we're talking about accounting being the overall arching discipline, where the bookkeeping piece kind of is a subset of that. So when we're talking about accounting, we're talking about it as being the documenting, analyzing, and reporting of financial data in a systematic and timely manner. So it's the overarching. If you're thinking about a flow chart, you're thinking about the accounting function being up here, and then bookkeeping is actually a subset or a function of the accounting system. And so when we're talking about bookkeeping, we're talking about basically that's where we receive and we evaluate and we record the financial data in a systematic and timely manner. But even though bookkeeping is a subset of accounting, it is a very integral part of that, because as you all know, in order for the accounting system to work properly, then the bookkeeping function needs to work properly. So I'm sure you've heard of the saying, garbage in, garbage out. Well, if you have erroneous or incomplete data in your record keeping system, and as many of us have come to know and see lots and lots of work that has been done in the records that has just been shoddy, or we had no clue where these people were coming from. We understand that a lot of that stuff, if you try to run reports based on that data, well, you can run the reports, but are they going to be anything anybody's going to be able to use? I don't think so. Most of that stuff is going to be garbage. So it would be better to have no records at all than have unreliable and worthless data. So hopefully by understanding the extent to which incomplete or incorrect data can compromise one's financial records, we can essentially argue and appreciate the fact that bookkeeping is the foundation of a successful accounting system. Even though it's a part of the overarching accounting system, it's a very integral and very important part. And hopefully all you will agree with that. Yes? All right. Well, I'm going to go ahead and move on now. And here we go. We've got the first Q&A area here. So next we're going to talk about the accounting cycle. And the accounting cycle is something that we're all familiar with, but you've probably never really heard it discussed before. So this is a good review for those of you who've been working with it, or for those of you who are being introduced to it for the first time. The accounting cycle basically refers to the particular accounting related task which takes place during a 1-year time period. And this is something that throws some people off. And I've learned to ask this question during discovery calls because it's real important to understand. Not everybody's accounting cycle corresponds with a fiscal year, okay? And a good example of that is where I live. I have basically 2 municipalities. One is a school system and one is our county government. Now, school system's fiscal year starts July 1st and ends June 30th, and that makes sense due to the fact that schools usually run from a fall to spring cycle, but our county government runs from October 1st to September 30th of each year, and that can also dictate or define when their taxes are being completed and things like that, from what I found out too. So it's real important that we understand what their fiscal year is, because it may or may not correspond with the calendar year, but just so that everything is pretty simple as we're going through these exercises, we're going with the assumption that our accounting cycle will correspond with a calendar year, which starts on January 1, 20XX and runs through December 31st, 20XX. And notice how I left off the last 2 digits of the year, so that way I can continuously use the same material over and over again and not have to update everything. So that was one thing I had to figure out to do early on. So anyway, just understand we're going to be working with a calendar year, which is going to double as our accounting cycle for the purposes of what we're doing. But that may or may not be the case with all the companies that you work with. So here are the tasks that make up a typical accounting cycle. Now, note that these tasks are shared from the perspective of someone doing, like I said, a manual system, where you would actually have a worksheet such as this to start off by writing everything down in this worksheet. And this worksheet is what you're going to use to actually prepare everything when you start doing the year-end tasks. So we're going to break those out. We're going to break out the stuff that you do ongoing, and then we're going to break out the stuff that you normally would do at the end of the year to prepare your year-end financials. So anyway, and hopefully you'll appreciate how far advanced financial record keeping has come along, not having to do all this stuff manually. All right, so, and we're really spoiled with all the technology that we have. So with that said, the first task is receiving and evaluating the transactions from source documents received. So basically what we're talking about is documents are received by the business and are evaluated to determine what further processing may need to be done in order to know what to do with that particular item. For example, you may have a check come in from a customer, or a bill from a supplier, or a stack of receipts from an employee who purchased materials for maybe a landscaping project that they were working on, and they brought those into the office. So you've got to take those and bring them in and figure out what to do with them next. So you're going to evaluate those items to see what you're going to do with those in the next steps. So once those source documents are received and evaluated, then that second task is recording, or what we call journalizing, in a journal, whether it be a general journal or a specialized journal for cash received or accounts receivable, et cetera, et cetera. Okay, now basically when we're talking about a journal, and that's one of the lessons that we cover in my whole course, we get into how to do the general journal, but we'll touch on it briefly here. When we're talking about journalizing, we're talking about a chronological record of all transactions received. It's a very important part of the audit trail. So if a company is using a specialized journal for recording its transactions, and those journals may be handled by separate people throughout the company who are given that responsibility, and that kind of ties into the internal controls, which we'll touch on a little bit later in this particular lesson. So, but when we're talking about a journal, we're talking about everything coming through in order by date, and you're writing in what it is and that kind of thing. So you're entering those in the journal. Now, the third task is posting the journal entries into the individual ledger accounts. Now, once the transactions are recorded in our chronological record, then we have to break those out into the individual ledger accounts by separate departments responsible for keeping track of those individual ledger accounts. Now, as with the journals, the individual ledgers may be handled by the separate people in the company who are given the responsibility for recording those transactions as we receive them. So when we're talking about filling out those individual ledger accounts, we're talking about actually putting them into physically the buckets that they go into on paper. Okay, so our chronological record, there's no way you'd be able to go back and trace all those individual transactions until you actually move them to the journal. So, and we'll touch on T accounts, how they relate to the individual ledger accounts in just a few minutes, but that's basically what we're talking about. Now, as I mentioned previously, those first three tasks are done pretty much on an ongoing basis throughout the year. But when you're ready to close the books at the end of the fiscal year or whenever, and generally you have to have, in most cases at the end of your fiscal year is when you have to do the official financials. Some people like to do them quarterly. Of course, with automated software, we can pretty much do them anytime. But at this point, we're talking about the remaining of the stuff is what we're doing to actually prepare, like I say, our worksheet to get ready to do our year-end financials, okay? So the next step after that would be the first step to do that would be to prepare the trial balance, okay? And then the trial balance is created to make sure everything entered in our financial records is in balance before moving on to the next steps to create our financial year-end reports and to close our books. And then the next task after that is to record any adjusting entries and preparing the adjusted trial balance. That's all done on this same worksheet as well. Okay, an example of an adjustment is if you have to make adjustments in your books for payroll that may overlap a period, like if you have a paycheck that gets issued on January 4th, but it only covers like maybe the last few days of, but if the last few days of December is in there, you have to do some adjusting entries, especially if you're an accrual-based business. When you do that to make sure that your books align with that accrual-based accounting cycle, okay, or accounting area. So, but you've got to do those adjustments. And then once you do those, and then other adjustments would be for like depreciation, and you also do those to also mostly for depreciation and amortization as well. So anyway, after you do those adjusting entries and preparing the adjusted trial balance, and then you will prepare your financial statements, and those statements will be your official fiscal year-end statements once they're vetted by somebody that has official authority to do so. And in most cases, as bookkeepers, we don't have that authority. We have to kind of hand that over to like a CPA or someone like that has those credentials that can be, someone that can be official vouch for those statements. We just prepare them. We don't have the official say so. We just know where everything goes, but they have the official authority. So, and then once those statements are done, then we have to record the closing entries and prepare the closing trial balance. Now we have what we call temporary accounts, and we'll get more into that when we talk about the financial statements. So our profit and loss basically covers, the yearly accounting cycle for each company. And so at the end of that accounting cycle, we have to close out those balances. And then all that stuff gets transferred to the income statement through the equity section. And we'll talk a little bit more about that as we go through. So once we do that, then we prepare closing trial balance to make sure everything is still in balance before performing our final task, which is preparing the closing financial statements. Basically, we are preparing a closing balance sheet and a zeroed out income statement reflecting our new equity amounts for the new fiscal year cycle, as well as confirming that there are zero balances in all of our revenues, expenses, and drawing accounts. Now, having discussed all these tasks within a manual system, it's important to note that for the purposes of this course, we will not be strictly following these steps as presented, rather to teach the concepts of a double entry bookkeeping system. We will work with T accounts, which I had mentioned a little bit earlier, are similar in principle to the individual ledger accounts that we had just discussed a little bit ago. Now, hopefully by the time we are through today, you'll better understand the concept of debits and credits, as well as the underpinnings of the double entry bookkeeping system. So anyway, those are our tasks in a typical accounting cycle. And we're going to go ahead and pause here for some Q&A. And it looks like we have a question here or a comment. Specific journals are based on certain type of transactions or certain clients with all transaction types. Okay, so it could be either or, and that is something that I don't have complete knowledge of, and it's beyond my head. Basically, just understand that if you're in a large company and you're doing a manual system, it would be too much to have one person enter all those transactions into like maybe more than one journal. So you might have a person handle one journal. You might have another person handling another journal, and you might have another person handling a different journal. So there's like cash journals, there's like accounts receivable journals, there's like different things like that. So
can I chime in here?
Sure.
So one thing to remember when you're using, I'm going to go and turn on my camera. One of the things to remember when you're using QuickBooks Online is that it's form-based, or QuickBooks in general, desktop or online, that whenever your software has a form to do the task, don't use journal entries. Journal entries are good for end-of-year adjusting entries like depreciation or closing your equity, but you should never use journal entries for accounts receivable and accounts payable and standards. And I think that's what Tarika's
okay. Good. Yeah. And that's one of the things we also touch on in the course when we talk about the general journal. We do talk about that, but in a manual system, that's the way that you do it now. As you're using a software such as QuickBooks, all that is going on behind the scenes. So there's a way to actually look at those transactions to see it's beyond what we're doing here, but that we do talk about that in the last two lessons that we cover in this class. And then someone else had asked about what accounts to close at the end of the year in QuickBooks. As far as a manual system, you're closing out all your profit and loss accounts, and the difference between, and we're kind of getting ahead of ourselves here. So trust me, when we talk about this, we're going to talk about the difference on the profit and loss, and all that gets folded into the equity section of the balance sheet. So hang on to that thought, and we will get to that, I promise. So hopefully it'll make more sense, because if we talk about it now without covering that, it probably won't make a whole lot of sense. Does that make sort of sense? Anyway, let's go ahead and move on, if that's okay. Anything else burning out there? I don't think so, but we'll see. But we will come back to that, I promise.